Welcome back, everybody. Today we're going to do a analysis of Lululemon, and this may be presenting a buying opportunity. That is the short and fast of it, but it's currently trading at $338 a share, and over the past 5 years, they are 100% basically, 99%. You would have outperformed the S&P 500 over the past 5 years if you held this stock. They have a price to earnings ratio of 27. Which is actually not bad for the type of growth that this company has. At least has had in the past, but maybe they can't expect that growth going forward, but we'll see. Checking a look on the financials here. Their revenue growth has been very, very steady, very, very good. 20%, 20%, then dropped down to 10% during COVID, and then just exploded out of that. And they last year had 18% growth. Over the past quarter, they were up 15%, and the company is guiding for plus 10% into 2024. This is a company that could get hurt by recessions, but also it's very good if people have more disposable income. And this is a company that's more marketed towards women as well. But taking a look at their pre-tax income, or I mean their basically their net income, it just follows so steady with their revenue, and like their margins are pretty solid as well. They also do a few buybacks. For their balance sheet is very, very good. They have negative 840 million in debt. Very solid balance sheet. Cash flow, yeah, they buy back a bunch of stock. Although, yeah, they do keep a lot of earnings on their balance sheet, which is always a good thing to see as well. So they can weather the storm in case they have a couple bad years. Also, they have a lot of cash to reinvest. Let's look at their margins here. Their ROIC is very high at like 20 to 30, which is really, really good to see. Their gross margin, 58%, so super good gross margin. And their net margin is around 15% as well. Their last quarter, they had 20% net margin. They spend some money on selling, like advertising, and of course R&D as well. So with their gross margin being so high, they could probably get their net margin higher, up to like 20 or 25% eventually. But they also have to invest in marketing and stuff to stay relevant. So let's I pulled one of their slides from their last quarter's financials, and this is one thing that I wanted to see right here. Their total net revenue increased 16%. The Americas totaled 2.6 billion, or 80% of their total net revenue. So they make most of their money in the Americas, and then they have 9% of their total revenue from China. But look at this. China sales increased by 56% over the last year, which is very good growth. So it does seem to be being received quite well in China. And I could see this growth staying pretty steady for a few years at least. Probably becoming more so like 30% of total revenue for this company. And for the rest of the world is taking to Lululemon pretty well as well, because sales have increased 32% year over year. So it does seem like the brand is very, very strong at the moment. And yeah, this could be a brand that competes with Nike, honestly. Between the two, I would definitely take Lululemon over Nike. That's just my thoughts on that, based on the financials and the growth. Let's take a look. Okay, I actually have Abseller pulled up here. Let me pull up Lulu. We want to look at their short percentage. So we'll go to their stats. And their short percentage is 3%, which actually is kind of high for this brand. I wouldn't have expected it to be so high, but still, I don't think it's that big of a red flag. Usually above 5 or above 10 would be a red flag, but 4% and 3.25 is not too bad. For financials, or let's look at analysis here. So I use the analyst estimates from here, according to 28 analysts, right? 14.15 for their earnings per share, going up to 15.83 the next year. And then revenue, they're expecting 12% this year, and then going up to 10% the next year. So I plugged that stuff into my DCF model here. Let's take a look. Put the EPS here, revenue here, buybacks. They did about 500 million in buybacks last year. Net debt, negative 840 million. Discount rates of 10% because I want the 10% return on all my stocks. Exit multiple of 20. This might be a little bit too high because their growth will probably decelerate after 15 years, and it is a clothing brand. And usually clothing brands don't really trade at that high of a multiple. So maybe 15 would be more fair. We'll go 18 just because it is a strong brand, and we're expecting growth of 15%, slowly decelerating down to 5%. In this case, the company's worth $326, and for the revenue model, we've got growth of 10% every year, and then slowly decelerating down. Yeah, they were expecting 10% growth, and I think that will continue for a while. It could probably decline, maybe like 9, 8, 8, stay at like 8 for a while. But I do think that this company still has some growth left in the tank. Profit margin of 15%. They could grow this as well. They could get this up to 20%. In the case that they do get this up to 20%, we could actually check that out. Maybe they go to 16 and then 17 and then 19 and then they finish out at 20. Whoops, wrong one. In this case, then they are worth $386 a share. And right, I mean, their growth historically has been between 10 and 20%, so they could definitely do that going forward. I do think that this is a reasonable projection for Lululemon. So yeah, it's definitely not a bad company. I would take this over Nike any day. And yeah, that's my conclusion. I hope you guys enjoyed. If you did, hit that like button. Also, leave any comments if you think I missed something. And yeah, I'll see you in the next video.